Good afternoon, everyone. It's Harry Swaminathan. I'm looking at Green Mountain Coffee Roasters. For people that may not know the stock, this is a very exciting stock. It's reporting tomorrow after business hours. Now, tomorrow Tesla is also reporting, and I'll be doing another video on that. But let's focus on Green Mountain Coffee Roasters. GMCR is the symbol, and you can see that GMCR moves quite a bit. Now this is a 1 year daily chart, and the reason I've put that is I wanted to sort of get a feel for how much this stock moves on earnings. It looks like out of the previous 3 times, 2 times it made a big move. This one was right here. It went from 28 to 36, which was a big 20%, 25% jump. And then here again, it jumped from about 59 or 60 all the way up to 76, again a 25-30% jump, 25% jump. So we can expect this stock to move tomorrow. And so what is the best way to play this? So when we expect, there's 2 ways you can look at earnings plays in general. Okay, one is you want to sell premium and sell premium far enough so that it doesn't hit those strike prices. And the other way to play it is you play the movement game. So which means your strategy should be one that can take advantage of movement. And the more I look at GMCR, I'm inclined to go that way. I'm inclined to make a big move. So if we're going to zero in on the last few days here, and here you can see now, it may not be very clearly visible, but the volatility is rising. You can see the Bollinger Bands expanding, so you can see that volatility is coming in, and it's priced to perfection because this is very close to its all-time highs and everything over here. So it's priced to perfection. So if it doesn't deliver for some reason, then the stock is going to come down pretty hard. I mean, it'll come down by $15-20, and similarly, and if it meets expectations again, then it could go into new all-time highs. So that's kind of where the stock stands. Let's go take a look at the options and what we have here. The best one I could think of is here. Let's go here and look at the volatility first, because for any earnings event we need to study that. Okay, so we can see the volatility is very high for the weeklies, which expires this Friday, and that's going to be obvious because this is the one that's exposed to the most exposed to the event in terms of price movement. So that is 159, comes down to 107 in the monthlies, and then 84, 76, 71, 69, and so on. So I guess its steady state is going to be somewhere between 63 and 70. That would be the steady state volatility, and of course all of these get bumped up because of the earnings event. But what is the expected move? The expected move is about 10.6, maybe 11, 10.6 on either side. That's of course the one standard deviation, which represents 68%, but still the expected move is in the range of about $10, let's say. So we can expect it to move to either 71 or 91. And so if you look at the options for that, let's go take a look at the option. And so if we look at the option chain, let's go take a look at the weeklies first and see if we can expect it to move about $10, $11. If you were to play the short game, selling premium and selling options, like say sell a strangle, I think the minimum you would need to go is at least about $15 on either side. So which would mean come down to about 65, and on the higher side go to about 95, maybe even 100. So you can see there's not a whole lot of premium there. So one of the things you should always look for is when you don't see a strategy that has a very good risk reward in terms of selling premium, then obviously the opposite is going to be true. So which means you buy premium, and that might work out better. You might find a better trade on the opposite side better. So and so that's what I've been looking at. And so now when you want to buy options, then obviously we can't be looking at these weeklies and things like that. So we want to go out as much as possible, and we don't want to see a volatility crash. So basically, even on September, you can see it's almost 70%. So that might come down by 10 points. So what you want to do is go out into October, and what I've selected here is a long strangle. So right now it's right in between 80 and 82.5. So these two strikes are at the money. So we buy the 80 put and the 82.5 call. And to buy that for 10 contracts, this is going to be the debit. So if you enter a 10 contract position, it'll be 14,900. If you enter a 1 contract position, it'll be 1,495. So that's what we're going to pay for this. And so now when we look at the risk profile, and let's say if we get the expected move, which is $10, right? So if it goes from 81 to 71, we can see our position will have a profit of about 1240. And on the other side, if it goes from 81 to 91, you can see it's going to have a larger profit. That's because it has a slightly positive delta. And that is again because it's not right in the middle of 80 and 82.5. It's more towards the 82.5. Therefore, we will have a positive delta, which I'm okay with. I'm not too concerned about having a positive delta. At least the last 2 or 3 times, this stock has surprised to the upside. So that's this is the trade we want to put it in. We can put it in today. We can put it in tomorrow, whenever. But I'm going to put it in today. This looks like a decent trade. And it's a debit trade, and of course it's in October, so if something doesn't work, we always have enough time. And since we are buying options, all accounts can do this, including IRA and 401k and all of that. So this is the trade we're going to put on GMCR. I'm going to send it out. Thank you.